Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. Well, we're back with Ron Butler of Butler Mortgages. He's been posting a fair amount lately with some pretty interesting topics. Yesterday was, will house prices go down in Canada? Maybe we're all about to find out. And before that, he was talking about Canadian job numbers, all bad news. And the worst part, it's just the beginning. And before that, he was talking about house sales keep slowing down, prices edging lower. What's next? And before that, private mortgage craziness is alive and well for now, but chances of accidents keep growing. So lots of different topics to address. Ron, welcome to the show again.
Thank you. Glad to be here.
So tell me, what do you think is going to happen with house prices?
Well, it's a big market, big country, big different markets. I think maybe virtually nothing's going to happen in some places like Atlantic Canada. They have a limited inventory. They have some interest from outside of the provinces. It seems to keep chugging along. Quebec is sort of a steady state. They don't have a lot of immigration who's coming to Quebec. They limit that to a smaller number than the rest of Canada. So they don't feel the same kind of pressures we do. So they just don't tend to have a lot of big swings in their house prices. The prairies, obviously, Alberta's doing very, very well. Alberta has got a upswing economy, and their house prices seem to be rising steadily. Pretty quiet in Manitoba and Saskatchewan, but over 50% of all the people in Canada live in British Columbia and Ontario. And right now, those housing markets are not doing well. Sales in some cases are at 28-year lows.
28-year lows.
Yeah, for units, and that's after in Ontario, you got to add like for 28 years, you got to add like 1,000,004 people to that, and it's still 28-year lows. So, yeah, it's not good. We see price declines, particularly in the condo market, and we see a worrying development of there's going to be another 20,000 units come on stream in the GTA for condos, new completions in the next 18 months. And today, a small condo, sub 500 square feet, sells for around $950 a square foot and falling. And many of these condos were purchased for about 1,200 and up. So we got a severe price disparity,
So
mispricing.
they were purchased at 1,200 and up. They're now
5 years
selling
ago. Yeah.
at 950 a square foot, and they're going down from there.
Well, okay, I should be more accurate. They're new construction coming on stream. New construction in the condo world takes 5 to 6 years. So 5 to 6 years ago, these condos were purchased with the expectation that condo prices would rise endlessly, and that $1,200 a square foot, $1,300 a square foot, $1,400 a square foot would make sense by the time the completion happened in the next 2 years. So it doesn't look like that's going to happen at all. We've had some situations where people have even been balking at closing, and we don't even have the majority of them going on yet. So yeah, it's going to be, there's really no doubt that this new wave of condo completions going on in 416 and GTA in the next 18 months are going to face some real issues.
So what are the issues? Because what you said is they were bought at 1,200 bucks a square foot. People had to put down what, 15 to 20% in a deposit. So
20%, yeah.
they
20%,
would
yeah.
have put down 150 to $200 a square foot in deposit, and you're now selling at a loss. So that you're selling at 950, or I guess you have to close at 950 bucks, 950 bucks a square foot when you're saying it's worth 950 bucks a square foot, and you've already lost 200 bucks. You've lost your deposit, is what you're saying.
You've not only lost your deposit, but you're confronted with the truth that it's unlikely to go up anytime soon. And most problematic, if you rent it out, you'll lose $500 a month, every month, like clockwork. So why close?
So what you said is the rental condo crash seems inevitable at this point. Is that what you're talking about?
In the 416, yes.
What about the 905?
The 905 is all over the map. You can find some condos that seem to be overpriced and some condos that seem to be fine. It's very much, it's so much more a regional thing. Obviously, there's some people in Durham region are probably going to be wondering what's going to happen. There's some people in Peel who may have some problems and may not, but the 416 is very concentrated. I'll give you an example. If right across the street from a 2-year-old building that's selling at 950 a square foot, your building is just coming on stream at 1250 a square foot, and you got to say to yourself, I can't wait 7 years for this price to catch up. Well, I'm losing $600 a month. I got to bail. I mean, I'm not saying that will happen, but I'm saying it's a possibility.
And so what do people do if they have to bail?
Well, people do lose their deposits, and in some cases, there's no question that they'll be litigated. Now, the really interesting thing is, if enough people in that building that's just been completed, if enough of them say, I'm not going to close, I'm not going to give you any more money, I'm not going to close this transaction. If enough of them say it, of all the purchasers in that building, let's say out of 300 suites, 250, 200, 220 people say, no, I'm not going to do it. I'm just not going to do it. Then does that put the developer into receivership? Because they've got a mortgage on that property, right? So if they can't turn into a condo corp, what are they going to do? Because they can't. If they don't have enough participation, they can't form the condo corp. So what
And they
happens
can't
then?
get and they can't pay off their construction financing.
Correct. Now,
What happens to the construction financing?
there's like that does the bank foreclose? Does the bank say, well, we're going to take it over, we're going to put you into receivership, take it over, and we're going to sell these units for 900 a square foot, resell them for 900 a square foot, and keep
Yeah.
the money from the deposits. But we frankly don't know what the pricing will be like. I mean, if enough of this happens, if enough of these condo towers don't successfully complete, is that going to create a lot of fear in the space and it could just spiral out into something worse? I don't know those answers. I'm not trying to be an alarmist. I'm just trying to say that there is a basic look. I've been through this before. If you harken your mind back to 1990, okay? In 1990, there were condo buildings that completed, and 80% of the buyers said, I'm not going to close. We were both around then.
80% of the buyers said we're not going to close.
We're not going to close.
And what happened to developers? Did they go bankrupt?
Well, in most cases, the lenders worked with them, and exactly as I described, the deposits were seized, and gradually at much lower prices, the units were sold until finally the condo corp could form.
So therefore, if
It happened.
you're a buyer interested in a condo or an investor interested in a condo, what's the answer? Wait for the far lower prices that are going to come from the banks once they seize their
Wait,
assets?
wait for lower prices, but that in itself is part of the downward spiral of condo prices. So if you have everybody saying, I think these condos are in trouble, let's sit back and wait till they really let's sit back until the 950 becomes 800. Because if there's enough pricing pressure, that could happen. So you see how buyer intention during FOMO, when everybody doesn't want to miss out and everybody thinks, oh, if I don't grab one today, the price is going to be up 10% more in 6 months. When the opposite happens, everybody stops buying. Everybody says, well, wait a minute, it's 950 a square foot now. Maybe it'll be 850. Maybe it'll be 800. I'm not going to go near anything right now.
Ron, I get an email probably 2 or 3 times a day with assignment sales.
Yeah.
I never
There's
used
no
to get them.
assignment sale. No assignment sales are happening. Absolutely. You didn't say yes to any of those emails, and nobody else is saying yes. So there is the assignment market for condominiums in Ontario is effectively dead.
And so if I want to assign, I got
You
no
can't.
chance to do that. And so
You have
I've
no
either got
chance.
to not show up with my closing money or I got to close and pray that something else happens.
Yeah, but you might just be looking at into an abyss, because you might say, well, if I do close, it's 10% less even than my deposit because the market's falling. So and if I rent it out, I'm going to actually lose 600, 500, $600 a month. Isn't it better just to say, keep my deposit and I'll take my chances on the lawsuit? I mean, at a certain point, you feel that you're faced with an untenable situation.
But these developers can't handle that many lawsuits, can they?
Sure, they can. They're in many cases they're big organizations. They can hire lawyers, and by the way, the case law supports the developer. I mean, if you renege on a deposit, we have full recourse in Ontario. You could be litigated for an additional sum for whatever they sold the property for. But
But if the
The big problem, Brian, is what if enough people say no that they can't form the condo corp, and then their lender, their building finance lender, is after them to say, well, we got to take action. We have to move right now, and we have to seize the building, and we have to sell these units and get our money back.
So if this is happening with condos, and I heard that there's 24 to 28 months of condo inventory, which is sounds like it's comparable to your 28-year low in sales. Is it also happening in single family homes? Let's take a break for some messages and come back with Ron Butler of Butler Mortgages in 2 minutes and ask if this is also happening in homes. And if not, will it happen in homes? Stay with us, everyone. Back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour, Saga 960. We're chatting with Ron Butler of Butler Mortgages, and he's just described how the condo market is in free fall. Is that fair to say it's in free fall?
Not yet, but it is a difficult scenario developing based on many, many more completions, thousands and thousands of more completions hitting the market in the next 18 months.
So if it's happening in condos, shouldn't it have an impact on single family homes as well?
That's a great question. So the correct answer is that about 7 years ago in the GTA, everybody stopped building single family homes for except in the farthest reaches of the province, like some developed subdivisions in Innisfil or subdivisions in Elora or things like that. There's virtually no development. By the way, development came to a complete and total stop 16 months ago when it was clear that the mortgage rates were way up. Like there's only completions of pre-sales going on right now, and there's very few of them because in the low-rise market, the single-family market, those homes complete in about 12 to 18 months. So it happens much faster, and it doesn't have enough time to become a crisis. But the main thing to understand, Brian, is we quit building single-family homes in the GTA years ago. Like of all of the homes being started in the GTA for the last 5 years, 80% of them have been high-rise.
So what about resale of single family homes? Is this going to impact the resale market?
It may, but let's face it, if you haven't built any new single family homes or low rise homes for 5 or 6 or 7 years, there's a scarcity issue. So, in all likelihood, yes, there will be some price compression in certain parts of the GTA for single family townhomes and semis, but it won't be as dramatic an issue as could be experienced in the condo market because there just isn't as many of them.
So the condo market, it seems that it's a supply issue. That the supply was too great for the price that they were being offered at. But what you're saying is in the single family home, it's a demand issue that demand is there and the supply didn't go up dramatically.
That's about right. I mean, look, you can't, if you don't build any new single family in the GTA or build very, very little, just some on the edges of Peel, on the edges of Durham, on the edges of York, but not in any great number, then you do have a kind of a scarcity situation. Now, an important part of things to understand about the condo situation is that it's a mispricing situation. It's a mispricing problem. So at the time that they were being sold, they were significantly higher priced 6 years ago. When you had a chance that 6 years ago, you could have bought a condo for $750 a square foot, and you were buying one for like 1200. So you were absolutely banking on massive appreciation to make the deal work. Now, that's just a mispricing mistake. It's not necessarily a supply issue. It's just a misunderstanding of what future pricing could be. It's effectively a condo tulip bubble. You remember back in the 1600s when they kept breeding new versions of tulips, and so we're selling a tulip bulb for the price of a townhouse in Amsterdam, until finally everybody said, no, I think these prices don't make sense, and the whole thing collapsed. Now, I'm not suggesting collapse because in Canada we need housing. But what I am saying is it's incredible mispricing when you're buying a product that's 1,200 a square foot, and yet the resale at the time, 5 or 6 years ago, was only 7 or 750 a square foot. You were really banking on incredible appreciation that just hasn't happened.
You posted a couple days ago about the private mortgage business, and you said it was craziness. It was alive and well, but only for now. What did you mean?
I mean that there's going to be some additional pressure on the private mortgage business. I mean that there is, by the way, it's an incredibly high growth market. Like if you talk about, let's talk about defaults. So default rates are what happens when a mortgage holder hasn't paid for 90 days. So that's a default rate. The big Canadian banks run incredibly low defaults, less than a quarter percent, like 18 basis points is the 90-day default rate at a big bank. Like that is incredibly small. It's even half of the normal historical average of what it should be of about 36 basis points. But in the alternative lending space, which are small lenders, institutional lenders, but they lend to folks with a little bit worse credit at higher rates or people with a little bit harder to prove income at higher rates, their default rate has already jumped to nearly 50 basis points, almost half a percent. And in the private mortgage space, commonly referred to as MICs, mortgage investment corporations, we know of several that are running 4% default. So 4% of all their business is stopped paying their mortgage. Now, that might not be a problem, except if prices fall, then it becomes a problem because you're not going to get your capital back when you sell that property under power of sale. So it's clear that there's going to be some issues in that space moving forward. Prudent operators are probably fine, but aggressive private mortgage lenders are definitely going to start to feel some heat.
What percentage of a condo are these private mortgage lenders lending at?
Oh, they don't lend on anything that's not finished, so they only lend on a finished condo, and they would lend at somewhere between 70 to 80% of the value of the condo, the appraised value.
So you can suffer a 20% decline.
Sure, you could, but
But if they're, go ahead.
But unfortunately, when you have to go through the litigation of having to take the condo over through power of sale, and then you have to pay real estate commissions to sell it, and then you have to pay legal fees, and it just adds up. Oh, and you're paying maintenance fees, and you're paying taxes during that time, property taxes. Oh, and there's a tenant in there that you have to offer a significant bribe to leave the premises so you can get it sold. So there's no question that you're going to lose money at that point.
So are you worried then that as these prices come down from 1,200 to 950, but the private mortgage businesses are only what lending, 80% of the 950, the prices are going to go down 20% from the 950 to put some of these private mortgage lenders in a
Sure. Yep, it's like but they may have lent on they might have lent on the 950 value themselves. So if they had 20% or 25% margin, so if it drops, am I suggesting that those condo prices will drop? Well, some of them have already. We've seen some drops in prices. They also have exposure at different time frames when they did the loan. So for instance, let's say in 2021, at the absolute peak of real estate Christmas, or everybody thought that everything was going to go up forever, and people were making multiple bids on every single property they looked at. In some cases, there were 20, you remember, there were 20, 30 multiple bids on properties. It just went up and up and up, particularly on the outskirts of the 905 region. So in those cases, people were bidding it up, and they were getting loans, mortgages on those bid up prices. So now that those prices have come down from 2021, what's the exposure of the private lender if the people stop paying?
You also talked about house sales slowing down. So not that the prices were down, but the house sales were down. What's happening there?
Well, it's exactly what we referred to earlier. People are thinking, I've heard prices are falling. So if they're falling, I'm going to wait. I'm going to wait and see where they finally get to. And that whole market scenario of people holding back and waiting for a future lower price, that just brings sales to just a bitter close. Nothing's happening. It's just absolutely cold. The market's cold. Don't get me wrong. A sought after property, a property where So let's say the people are older and they finally decided to sell, and people have been watching on that street, on a particular street in a particular neighborhood, and people have been wanting to buy on that street for years, and finally that older couple decides to sell. Sure, that property is going to sell really fast. And sure, there's some perfect properties that people decide, well, I'm going to price this just right. I'm going to listen to my real estate agent. I'm going to price it just right. I'm not going to be aggressive. I'm not going to hold out for last year's price or the year before's price. I'm going to price it aggressively. I'm going to listen to offers. And it's a great home. Yes, those could sell. But everybody who's trying to get the same price as 2021, they're not going to sell, period. And they aren't. They are not selling. So that's what we're up against right now. And the more the buying public hears about the possibility of price reduction, the more they'll want to wait.
You posted on Canada Day about second homes and cottage country, and you're saying that it's up in Ontario.
Yeah, it took a little blip upwards just because of the capital gains change, just because of that tax rule change. Because people who had cottages for a number of years had incurred significant capital gains. And in order to try to minimize their situation under the new rule, they decided to try to sell as quickly as possible, just to take advantage of the old capital gains inclusion rate.
So you said it went up because of the capital inclusion rate, but what's the long-term trend? Is it following the same trend of slower sales and potential price declines that you're
Absolutely.
describing in the other
Absolutely. Yeah.
markets?
Yeah, absolutely. In rural markets and particularly in cottage country, let's face it, if you're faced with a high renewal increase on your own home and you get another high renewal increase on your cottage, you're feeling the stress and you're unlikely to buy a bigger one. Like it's just very unlikely to happen. So don't get me wrong. Once again, the very best cottages on the very best lakes, which are sold to people, are the top 1% earners in Canada. That could still happen, but the average cottage on the average lake, and yeah, no, if you're wondering whether you're going to be able to buy your first primary home, you're sure as heck not going to do it for the secondary home.
Gotten a couple of emails recently of properties under power of sale. Are those good ideas or bad ideas to buy if something's under a power of sale?
They're a good idea to look at, but they need careful analysis from an experienced realtor because it just might turn out that that's not a very good deal either. And one really critical thing about most power sale homes, there's no inspection allowed. You're buying them as is. So you could have some extra trouble there.
So buyer beware.
Very much so. It just because it's somebody who got in trouble doesn't necessarily mean that the people who took it over under power of sale are offering it to you for a great deal.
A week ago, you posted, is Canada just dead wrong about many policies that we still believe are right? Because the results are sure as hell awful. Let's take a break for some messages and come back and ask you what you're talking about in regards to these policies that you say were dead wrong, but we still think are right. Stay with us, everyone. Back in 2 minutes with Ron Butler of Butler Mortgages. Welcome back, everyone, to the Brian Crombie Radio Hour, Saga 960. My guest tonight is Ron Butler of Butler Mortgages. He's been in the mortgage business for a couple of decades and knows the mortgage business and the real estate business real well. I follow him on LinkedIn and enjoy his daily posts about what's going on in the real estate business. A week ago, you had a really provocative one titled, "Is Canada just dead wrong about many policies that we still believe are right? Because the results are sure as hell awful." What are you talking about? What are the policies that are dead wrong?
Brian, do you remember when they were building houses like hand over fist back in the late 1980s and it's just dwindled and dwindled? Well, one of the main differences between now and then, when we were actually back in the late 80s, when we were actually building enough homes for everybody who was coming to Canada, and there were fewer coming, but there was lots of homes, and you could buy a house and people could aspire when they got married and started a family, they could aspire to buy a house and it wasn't an unmanageable problem. So if you look back on what was different, well, one of the things that was different is when you wanted to open up that subdivision, when the developer went to that subdivision and said, well, let's start building houses, the local region or city said, yeah, that's a great idea. You just have to pay for the water and the power and pay for the streets, get the thing rolling, and let's do it. Let's get these places built. Reasonable development charges, reasonable permit fees. But today, before, and by the way, about 3 reports tops, like you'd have to do some groundwater studies, a few other things, just to make sure everything would work out. Well, today, you need on average 24 reports before you can apply for the building permits for subdivision. You need to do archaeological studies, ecological studies. You need to do studies about making sure that a helicopter won't run into any buildings. Okay, like it literally is an unmanageable list. Now, not just that, but the kind of homes we build today, they become so energy efficient. They're extremely expensive to build. They become so utterly safe in every aspect, and of extremely high level of materials must be used, and a lot of inspections have to happen. Well, guess what? Back in the 70s and 80s, nobody gave a damn about energy, and nobody really inspected them into the ground, and yet they're all still standing. You know, you and I can drive around Peel, drive around Durham, drive around those houses built 50 years ago are all still there. They're fine. Yeah, they're not as energy efficient as the new ones, but they cost so much less per square foot. So one of the questions we all have to ask ourselves is all this incredible level of red tape, this unmanageable level of security we've got to add, this avoidance of all kinds of liabilities, this incredible lengths of studies that must be done. Is it really in our interests? Because it's created homes that on average, a single family home is in excess of $1.4 million. So has it really worked out well for the average Canadian doing all this stuff?
And your answer is?
I don't think so. No, I absolutely don't think so. I don't think so. I am so doubtful that these 24 studies, like seriously, an archaeological study, like we're gonna see if there's any broken plates and chipped arrowheads in a vast swath of land before we build a subdivision. Like we never did it before. We built all of Toronto, all of Peel, all of Durham, all of York. We built all the way out. We built Hamilton. If anybody found a broken plate, they just threw it away. Like nobody cared about the archaeological study. But today, developers spend millions and millions and millions on these studies.
I'm not sure if you heard the first speech by the incoming Chancellor of the Exchequer in the UK, who has come out and announced a massive change in planning regulations and zoning regulations, where the federal government, the national government in the UK, with this new Labour government, is going to override all of the local planning zoning regulations and dramatically improve the ability for people to build homes. And interesting enough, allow homes to be built in what is the green belt around London. So opening up, and they say that it's one of the most important things they can do for the future prosperity of the UK is decrease the pricing of homes and dramatically increase the supply of homes, because they said that home ownership has declined dramatically and the prices of housing in the UK are astronomically high. What do you think of that strategy?
Well, it just makes sense, right? I mean, if you come back to the 24 reports, the incredible red tape, a green belt that you know we're talking about a green belt where about 50% of it is not a farm, it's just some bush. So yes, of course it's true. We've regulated ourselves into a corner, which in many ways has propped up high prices in real estate. The Chancellor of the Exchequer is not wrong. I mean, if you look at states of the union where there's the least regulation, for instance, Texas, if you go to Texas, they have the lowest house price. Their house prices are so much lower than ours, it's ridiculous. And I mean, I'm serious, like 1/3 the cost of ours to 1/4 the cost of ours. And yet it's a prosperous state. It's growing economically. It has major cities like Houston and Dallas. It has every kind of facility that we have in Toronto or Vancouver. And it's that people are happy with houses that are 1/4 the price of what we have. And it's very easy to build down there. It's back to the old days. Put in the roads, put in the water, put in the power, and get building. I mean, we don't need 24 reports and we don't need to charge you $800,000 a lot for development fees.
So should we all rent?
Should we all rent? No, we shouldn't rent. We should not give up the dream of home ownership. Look, there's profound unfairness in that. If people in their 50s and 60s have a home and it was relatively easy to get, then why should we be depriving all the next generations of that useful fact of home ownership? By the way, Brian, it's not just building up big equity and making money on the house. How about just having a paid off house when you retire? And that's one payment you don't have to make.
Last question. You also posted about jobs, which I found interesting. You said Canadian job numbers, all bad news. And the worst part, it's just the beginning. The employment rate has been rising to 6.4% with negative job creation. Should we assume it will get worse? Yeah, we absolutely must assume that. What's your concern?
My concern is that, first of all, construction, other than government-related construction, has fallen off a cliff throughout Ontario. And for the first time, we've that don't have any new jobs to go to once they finish the one they're at. Manufacturing has been quiet throughout. There's been very few new plants built. We've heard the stories of these EV battery plants, but none of them are built yet. And there actually have been some delays. For instance, the Ford plant changeover was delayed from 6 months to 2 years. So we've got softness in manufacturing. The only people who are hiring really, Brian, are the government. The government have been the biggest employer increase in employment for the last 9 years in this country. And it just eventually that reaches an end. So where's the employment going to come from? A recent stat was just posted that there's more unemployed people in the GTA than there is the entire population of Buffalo, like 338,000 unemployed in the GTA. Sorry, Ontario. I got it wrong. Ontario. More people unemployed in Ontario than the entire population of the city of Buffalo. Now, that's problematic in my mind. And by the way, we've added 3 million new Canadians in just about 3 years. So they create a certain amount of work on their own. Just having those people here means that there's got to be transportation, they've got to be fed, there's got to be some growth in jobs just to support those people. But even now, with all those people in Canada, we're seeing fewer jobs. We're seeing growing unemployment. Finally, about 800,000 of those people who came on international student visas, and over the next 2 years, they're going to have to go home. So that was the decision that Ottawa made. They made a decision to stop the huge influx of student visas. So that's an area where our population is actually going to take a little bit of a decrease.
Ron, you've laid out a pretty dismal record for the Canadian economy right now, in condo prices, concerns in single-family homes, in unemployment, and manufacturing jobs, etc. What went wrong?
Bad policies. Bad policies. Like, if we just think back on just one single thing, immigration. So there was a point where there were 800,000 international students coming into Canada every year, when in the previous 2 years, 3 years ago, only about 240,000 had come. You've really got to ask yourself, like, how do we miss that? Like, how was that missed? How was that just, oh, well, yeah, we just let them in because when the schools issue a student or an agreement to come to the school, we just automatically issue a student visa. So you scratch your head and say, well, wait a second. When it got to 800,000, didn't you stop and say, where are these people going to sleep? So I just have to suggest that there is a level of incompetence to some of this stuff, a complete lack of planning, a complete lack of just observation of what's actually happening that is breathtaking. I mean, how can you do that? How can you just say, yeah, there's 800,000, we weren't expecting it. That's just one single thing, one single issue that is mind-bogglingly wrong. I love immigration, but did anybody ever ask these poor students where they're going to sleep? I mean, it's just mind-boggling. It's incredible. So those kind of policies, you make big enough mistakes often enough, there's going to be eventually there's going to be somebody's going to have to pay.
I interviewed a gentleman on Monday from London, England, about the UK election, and he's a lifelong conservative, and he voted Labour. And he said, Brian, in the last election, there were a whole bunch of people like me that changed their vote and led to the strong majority Labor government, first change to Labor in 14 years, a party that used to be almost socialist in its attitudes. And he said a lot of business people did. And he said the reason why, we're not ideological anymore. We just want competency in government, and we haven't seen competency in government. And he says people are no longer voting ideology; they're voting for competent managers.
And in the case of Great Britain, I think the most reasonable assumption is they just voted for change. They just said, well, these old guys have done a horrible job. We'll try anybody new. Just give us something new. Give us a chance at competence. Yeah, Brian, you're right. Competence should be the watchword of all elections for the next 10 years. It's got to be the most compelling issue.
Ron Butler of Butler Mortgages, thanks so much for joining us. Really appreciate it.
Thank you, Brian. Love being here.
We're going to take a break, and I'll be back with my own comments in 2 minutes. Stay with us, everybody. Thanks, Ron.